request on a recording.
Perfect. We are recording now. So go ahead.
Yeah, and this is going to go up on your channel for sure, and on my YouTube, and back into the watering hole.
Yes. And I'll be sure to share this to send this to everyone that registered that didn't make it as well. So, and if you got to hop off early, I'll send it as well. So really excited to talk about this topic, how to price your bookkeeping services. Working with a lot of bookkeeping and accounting firms over the years, I feel like this is a really tough topic. Like it's a really tough thing to know how to price your services, and are you pricing them at the right price point? Are you making enough money to really reinvest back in your firm? So we're going to talk about a lot of that today. This is a topic we've done a few times that I think a lot of firms have gotten a lot of value out of. So if you don't know me, hopefully you already do by now, but my name's Shahram, founder of Financial Sense, and we help accounting firms really just manage their practice, track the status of work, collaborate with your team, and really get work done with our workflow management tool. We're the new kid on the block. We've been around for 2 years, but given we spent, a year before we wrote a single line of code, interviewing accounting firms, understanding the challenges they faced, we took a lot of really great insights to build our tool off their feedback. And because of that, we've had a lot of success. And we live by that. It's a core part of our DNA, working with our customers and continuously improving our product. So what are we going to talk about today? First, I want to talk about what is fixed fee pricing and billing. So what is it exactly? What are the benefits of it? Why do we recommend that this is how you price your services? Why do firms really enjoy using this? But we're also going to talk about the downside and the risks to it. Like, what is the risk of doing fixed fee billing and how to overcome that risk and mitigate it? And then if you do get caught in the points where you didn't price your services correctly, some tips on how you can renegotiate your fees with your clients and go through that tough process. So what is fixed fee pricing? Basically, it's in the name. You basically set a fixed rate that your client's going to pay you every single month, quarter, or a year. It's typically a fixed amount that you agree on when you look at the books and you say, I believe it's going to take this much time. So it's a fixed fee. Doesn't matter how much time you actually end up working on the client, that's how much you're going to get paid. Also, one thing about it is you typically get billed before the work happens. So it's different from the hourly model where you have to actually perform the work, right? Because you have to track the time and see how much time you work to bill off of it. Typically with fixed fee, you get paid before the work is actually delivered because you know how much you're going to get paid. You don't have to do the work to know how much to charge the client. And we've also found that a lot of firms on the fixed fee model, they bundle their packages, bundle their services together, which creates a lot of benefits, which we'll talk about. So to give you an idea of what that may look like, right? Maybe
can I come back?
Yeah.
On that bundling services, one of the things that I don't recommend is that you bundle your subscriptions in. So even though they may be a part of the fee that you're charging every month, make it a separate line item. So my QuickBooks subscriptions, if I happen to be the one who's wholesaling them, that's a separate line item. My Dext, and here's another hint on turning some of these apps into a revenue center. Sorry, my dogs are right underfoot here. I'm turning it into a revenue center. So for example, with Dext, my clients have expense reports for their employees. So I charge a flat fee for Dext, and then I charge a per user fee for expense reporting. So that way, and I've had zero blowback on that. And one of the things that I've done with the bigger clients, so the small ones, it's 25, 50 bucks a month for Dex, depends on what else is going on with the client, and then $10 a user. And those clients tend to have people coming and going a little bit less, so I don't need to adjust my PAD, and for my American friends, I think that's ACH. So the amount that they prepay me every month, I don't need to go back in and adjust it. But for my larger clients that have staff members coming and going, I charge like Dex does. I basically charge in a bundle of 5. And again, I've had no blowback. So it's kind of $50 a month for Dex because they've got that many more transactions. And then it is $10 a user, but bundled in 5s. So for the bigger clients, it's a minimum of $100 a month. For Dex, they get 5 expense reports. Then it goes up to another $50 for the next 5. And that way, with the staff turnover, I am not changing out their PAD agreements. And my clients aren't going to, or me, fuss and fizzle over $10 or $20 a month. So price your subscriptions extra. And if your subscriptions require employees to be a part of it, charge a user fee for employee.
Yeah, that's a really good idea.
And if anybody is wondering why subscription fees increase and you want to make sure that you have an opportunity to change those, that is not related to your bookkeeping contract pricing. And also, if it's a separate line item, make sure to have a recurring transaction in your client's books that has separate line items for the subscriptions, so that when they go to their P&L, they see your value as accounting services and the subscriptions go in as software or office expenses. They are not saying, oh, she's charging me $1,500 a month, when perhaps 250 of it is subscriptions. Mm-hmm. Your value is showing through right away in their books, not, oh, she's charging me $1,500 a month. Straight up, that's what they think we're charging. Hopefully I didn't overtalk that, but I think it's a really key point.
No, I don't think you did. I think that's a really good point. I've actually never heard that, but that makes a lot of sense. So like kind of to build off the bundling, you know, a lot of people, what we recommend is you actually try to bundle your services together because it allows you to upsell your clients on other services. So like this is an example, right? So you can see I have like my bronze, silver, gold, and each tier has certain offerings. So
I'm gonna jump in.
Yeah, go ahead.
For a lot of us, that's called value. So fixed fee is when I kind of decide a price, and that's going to be the price for the client. Mm-hmm. If you are selling this is value pricing.
Yeah.
If any of you are following Ron Baker, Mark Wickersham, all those crazy fun kids, then that would be their equivalent of the value pricing.
Mm-hmm. Yeah.
I was going to say I'm done interrupting, but I'm not.
I know. No, you got a lot of good points. So, but as you can see here throughout the tier, they move up based off like, and a lot of reasons why a lot of people call it value pricing, right? Is because as they get more value, the price increases. So typically as they have more bank accounts, or they have, you can see here, or as they have more transactions, they're technically getting more value from you because you're doing more work. So it pushes them through the plan. Or
you're speeding up the delivery of the end result, or you're giving them more access to you in a quicker manner.
Exactly.
Some of them may take out phone support, and some may add in 48 hours return, and some may be 24 hours, and some may be same day. Those would be examples of where you would change out those value pricing tiers.
I think the key when you look at it is look and see what matters the most to your client. Like quick response times may be something that matters a lot to some clients, and they're willing to pay more for it. So this is kind of an example of how you can bundle your prices together. So, but let's go back and talk about the benefits, right? So why do you want to do like a fixed fee or value-based model?
Actually, can I come back one more, Shahram? Yeah. Sorry. I mean, you invited me to this thing. I'm going to come back one more. I'm going to go right back to before you even set your pricing.
Okay.
And you have done exactly what is 100% recommended over all of the value pricing, over the fixed fee, is that you have a transaction load, you have all that kind of stuff. I would encourage you to never, ever finalize a price until you have reviewed the client's books. So make sure that you have taken a look at their books, and do a little bit of an audit trail on some of the transactions. Some of my clients that have the biggest fees have very little transactions, but every transaction has some sort of complication to them. And I'll give you an example of that. So I had some of you know this story. I had a car wash that had thousands and thousands of transactions a month. They were coming in from a number of POS systems. This was one of my lowest touch clients though, because although I don't automate many things in the bank feed, I did automate all of that POS coming in. It automatically was sent over to a clearing account. Then the sales were being drawn in as well through zero sum, if you will, for lack of a better word, being drawn into that clearing account. And then we reconciled that clearing account weekly because the transaction load was so heavy. And that actually was not a big client for me in terms of what I was charging them. I've had other clients that have very little transaction load, high revenue, high complication. Every transaction is different. Make sure that you vet the books before you price the client. And I understand that for a lot of people, it is really hard to charge for that discovery. If you are uncomfortable, fine. I really recommend that you charge for it though, even a nominal price, because if they're not willing for you to pay to look at their books, and I've had lots of clients that I've looked at, potential clients, I've looked at their books, charged them, and then not taken them on because I'm not going to bring them value, or their books weren't what they told me they were. But they still get that evaluation that they can take to the next couple of people that they're going to look at, so that they have a better understanding of who they're looking at in an accounting professional, all the good stuff that comes away from that. Whether you're going to charge for it or not, though, please do an evaluation of the client's books before you even go down the road of pricing them. But still, on your website, have a base price, have your tiers, make it access, make it number of transactions. I get that for the forward facing part, but when it comes right down to it, never price a file without taking a look at it first. There's always surprises in there. And not because the clients are trying to scam you, but because they're not accounting professionals. They have no idea. They have no idea about, or they may have an idea about bookkeeping, but they may not know the shape that their books are in or how complicated their books actually are. Okay. I think I'm done interrupting.
No, it's good. It's all good feedback, and we'll talk about that some more. So what are the benefits, right? Why is the fixed fee model, or why do we recommend it? What are the big benefits of it? Well, the first thing is, if you do bundle your services together, it typically allows you to upsell your clients. We've seen that a lot of firms can increase their billings, really the revenue, by 20 to 30% without even adding any new clients. Because if you think about it, some of these clients, they may have like a lot of transactions, but they may not have as many bank accounts, but it pushes them into that tier or into that fixed fee. And it really allows you to upsell your clients more and use more of your services and create more revenue.
I agree.
The second big benefit is it's consistent cash flow, right? When you're on the hourly model, you're billing based off how much time you work every more. How much money you're bringing in can be a little bit unpredictable sometimes. But when you have a fixed rate, you're getting paid every single month. You have a really good idea of how much money is going to be coming in every single month. And that helps you better plan around your expenses, plan your cash flow. It makes you more comfortable with making decisions on like making big expenses like hiring a new employee or investing for growth or spending money on marketing. So you can be more comfortable with making these big expenditures because every single month you're going to be getting in typically this amount of cash. Another big one is it allows you to get paid in advance. So getting paid in advance is a huge benefit to a business because $1 now is worth a lot more than $1 down the road. So, typically we talked about you get paid a month in advance, but it's also very common to even get paid a full year in advance. So as a software company, we do this, right? We actually offer a discount to all our customers of like 20 to 30% off if they pay for a full year in advance. We are losing a little bit of revenue, but getting 10, 12 months of billings up front allows us to take that money and have more resources to invest back in the business, spend money on marketing to acquire more clients, hire new employees to support that bandwidth. So getting that money a full year or even sometimes a month in advance lets you invest more for growth and get a bigger ROI versus waiting to get that paid out over 12 months. So you can do more and your firm will grow a lot faster. So it's a great way to leverage cash flow and have more money to really invest in your firm and scale your firm.
I'd like to jump in with another benefit of the annual one, and that's for the clients that struggle with getting the stuff to you that you need to produce that they're looking for. So a buddy of mine, Mike, was brilliant on this, and it went something like this. And if he sees the recording, he's going to go, no, it doesn't go exactly like that, Kelly, but here's my recollection, and it's a good takeaway on it. So I worked on a file for him where the client struggled to get stuff to us, but really, really wanted to. And so Mike motivated him not by punishment or charging him more. He went with the reward. So Ben paid for the year, and it went something like this, but take this note away to deal with some of your problem children clients, not children clients, clients. They're not our kids. We don't need to save them all. So he charged him upfront for the year. If Ben got everything to him in a timely manner and Mike could deliver the books, and it wasn't holding back his bookkeepers, and it wasn't holding me back on doing some of the work, that was a huge benefit to Mike because it was so much more efficient. So Mike gave him a discount at the end of the year based on how well Ben did. I didn't explain it as well as Mike does it, but it's something to consider if you're going to do an annual model. And Mike built in the tax returns and all of that into this annual model, is that it highly motivated Ben versus punishment, right? Yelling at them and barking and the threats and all of the things that go on. Oh, wait, now I am talking about my children. That it was a different way of motivating the client. The client had already paid, but there was a possibility of getting some back because Mike realized the efficiencies versus continuing to charge them more, which feels like all you're doing is sucking the money out of the client. And you don't want that kind of relationship with a client. Carry on, Shahram.
Yeah, no, that's a good point. So, and another thing to add on to like the annual, you don't even have to really provide a discount. You can, I recommend it, but if you want to get more people to sign up for annually, but if you just ask, a lot of companies would prefer to pay for the full year advance. There's reasons, like there's tax saving reasons, like at the end of the year, maybe they want to spend some of their money. They don't want to show it in their bottom line, or it's just easier. Like accountant we work with, we pay for a full year in advance and there's no discounts, but it's just easier that way. So you'd be surprised how many people would agree to do that.
I know lots of people with that model.
Yeah, it's a great model. And you can't really do it on hourly because you don't know how much you're gonna be charging every month. So the fixed fee gives you the ability to do that. The other thing is clients like it, right? So it gives them to the transparency. So they know how much money they're going to be spending every month. So they can better plan around their expenses and their cash flow. But also there's not as many surprises, with hourly, sometimes some months can be more time consuming than others. You're spending more time on their work and they get a bill and it's twice or 3 times as much as the previous month. They're going to have questions and it can cause some uncomfortable conversations. So just the consistency and the transparency of knowing how much they're going to be billed every single month, clients do prefer that. Also, this is a big one. You're rewarded for increased efficiencies. So on the hourly model, right, you get paid based off how much time you spend. So if you find a way to do the work faster, whether it's implementing some type of automation that say cuts your time in half, right, or creating a streamlined process that makes your team more productive and efficient, or maybe you just get better at the job, right? You become more experienced. If you're saving time through like this experience or through these automations, well, technically on hourly, you're going to be losing money unless you have to renegotiate your rate. But on the fixed fee, you're rewarded for creating these efficiencies and automations, right? So if you automate your process and create efficiencies and you cut it down in half, you're actually becoming a lot more profitable because let's say you thought it was going to take 10 hours to do the work a month. You charge them $1,000 a month. You're making on average $100 an hour. But if you cut that time in half by just being better at your job over time, getting that experience or implementing automations, and you cut it down to 5 hours, now you're making $200 an hour. That's it going straight to the bottom line. It's making your firm more profitable. So on the fixed fee, since you're getting paid that no matter how much time you work, you're really rewarded for that. And that's a big benefit of it. And that's the thing we really preach on, because FC can help you do that. Go ahead.
Sorry, I jumped in right when you were going to do the FC part, which FC can help us be super efficient. As you know, Marissa and I love it. But when you are talking about all of these automations that you're going to put in for your client, and I know the client I'm going to be so much about how today that I'm going to try and keep dragging Shahram off of what he wants to talk about. But it's the how that's so hard, a fixed fee pricing. And so you need to change your language and your mindset. And that is, it is never about how long it takes. This is the new mindset.
Mm-hmm.
It is about what is the outcome you are achieving for your client. And I'm going to give you a really specific example here. I had a client, we were all day in payables. It was their payables were crazy, kooky stuff. And so back in the old model, and it was hourly, and I was a manual process on their payables, and then we automated that process. And by the way, this was a desktop client in the middle. And Cheryl, I think you know this story. I've told it a few times. In the middle was desktop, so it doesn't all have to be cloud-based to get to this fixed fee value billing nirvana world. It's not always nirvana, but we're getting there. At the front end, we automated the process of the bills coming into digital. And at the back end, we used Pluto to pay all of the bills. So we cut that down from essentially a full day of work to a couple hours at the front end. Still, for the bills, there's always work to do on that end, even if you're automating getting them in. These needed a lot of eyes on, and they were still job costing. But on the back end, we literally went from like 3 hours to 15 minutes. And I never changed my price on that because my client, Jeff, was thrilled that he didn't have to sign checks. He didn't have to deal with me running back and forth. He didn't have to deal with the printer. He didn't have to deal with the ink. Nobody had to mail those things. It was such a seamless process for Jeff. The outcome was better than when I spent more time on it. So my price at that end didn't change at all. So get the outcome mindset in your head. Use the language of outcome. Don't use the language of time. It's like, and always make it client facing, even though, sometimes it's all about you too. But the language that you use to engage the client in the value pricing and the value billing is, what is the outcome you are going to achieve for them? And there's some pretty heady outcomes with using some of this cloud technology that has reduced all of the time. So don't think of it in, oh, it's going to take me less time. Think of it in the beautiful outcomes that you're creating for them. Okay, Shahram, sorry.
Yeah, no problem. So last benefit, it helps eliminate the painful and time-consuming accounts receivable process. There's nothing worse than chasing your clients down, creating invoices, chasing them down to get paid. With fixed fees, since you know how much you're getting billed every month, you can automatically draft that from their account. So it's a very seamless process. It happens in the background. It saves you time. Your clients probably prefer it as well. They don't want you chasing them down for money. So these are a lot of the main benefits, but it really comes down to, it can help you upsell your clients. It can give you more money to invest back in your business. And it gives that transparency and just really rewards you for doing better at your job. It helps you boost your profitability as you create these efficiencies over time. So these are a lot of the benefits, but what's one of the big risks? And Kelly talked about this a little bit, and she gave some good advice on it, but one of the biggest risks is that you can easily underprice your services, right? Like she talked about, even if you're using like some things to get a rule of thumb, like transactions or number of bank accounts to estimate how much time it's going to take, it's really easy to underestimate it because every business is different. In every industry, there's different complexities. There's different things you may not know about the market or the business. And you may underestimate how long it takes. So if you're looking at a client and you're assuming it's going to take 10 hours, so maybe you want to make $100 an hour. So you say, I'm going to charge you $1,000 a month. It's easy to underestimate that and overlook something, and it really take you 15 hours or 20 hours a month. And then instead of making $100 an hour, you're making $50 an hour. And that's not enough money to really run your firm sustainably.
Ron, I'm jumping in again.
Yeah, go ahead.
It's not just about the time. Sometimes you have underpriced your services because they are a brain drain, they're an emotional drain. There's all kinds of reasons outside of time that you have underpriced your services. So it's not always about the time. But of course, this brings us back to at least do a vetting of the client file to begin with. But keep in mind that how working on a file makes you feel should have value as well. And I'm not saying charge less for the files you love, but I am saying definitely consider whether doing that work is something that you put off, not just because of time, but because there is something about it that you don't love doing.
Yeah.
Don't underprice your brain and your emotions.
Yeah, no, that's a good point. And to add to that, right, you may price your client right the first time. You may understand how much time it takes or how much of an emotional toll the client may take on you or the work may take on you. So, but here's the thing, you can price it all right, but as you do your job and maybe you provide great financial reports to your client, you give them that visibility and they're very successful and they continue to grow, they become more complex as they grow. So they could be priced right in the beginning, but as they grow, they get out of scope. Their business becomes more complex. And then the client, which was profitable for your firm, can slowly become unprofitable. So, and to add to that, as your firm grows, right, you can't take on the client work anymore. You have to hire someone to do the work for you. When it was just you, maybe you catch these things, maybe you don't. But when you're delegating this work to someone else on your team, you have no idea how long it's taking them. You're not touching it or seeing it anymore. And that risk factor increases as your team grows and you scale your firm, because you can't keep a close eye on, are these clients over budget? Are they taking a lot more time than we're estimating? So this is a big risk. Did you have something you wanted to add, Kelly?
I have a couple of things. First of all, is budget to actuals in financial sense. So even though I don't always charge hourly, and I'm going to come back to mitigating some risk with some hourly bumps here, but that in financial sense, actually, it's not just at the project level, but also at the task level. You can budget for time and run your budgets to actuals. And so even though you're not tracking time, you can get an idea of capacity, but also why is work taking longer? Is it something that's happening on the client side? Is it something that's happening on the team side? So although you may not be time tracking and billing out that way, you should have an idea of how long a project takes, because well, you need to know. I mean, you can't take time completely out of the element because we only have so much of it to get the work done. Mitigating the risk, and I know that I'm getting ahead of the deck and some of the other things. One of the ways to mitigate the risk, there's a number of ways to mitigate the risk on underpricing your services. I've already mentioned doing a file review. So here's some actionables for you. Write some of this down if you could. But so do a file review. In the beginning, I actually do a 3-month engagement contract, and I never do that contract until the client has got me everything I need to start working on the file. I don't engage with them if they don't get me everything, because they're never going to be a client that I'm going to work well with. I'm going to spend my whole life nagging them and they're going to hate me, and it's not going to be a great relationship. Engage after they've proven that they can follow your systems. Then I do a 3-month engagement, not a full year. And in that 3-month engagement, every single client that comes into my world has a base monthly fee. No matter what else is going to happen, it's $350 a month to be my client. Some of you are going, oh, that's not enough. And some of you are going, that's too much. whatever, pick a fee that works for you. That is the fee to be my client, to have contact with me, to have custom reports, all kinds of stuff that I can't come up with off the top of my head. And then for those first 3 months, you may be able to estimate what the rest of the fee looks like. If it's an intensely complicated client, do hourly on top of it. But make sure you've got a PAD agreement, ACH agreement in place that pulls that base monthly fee. You can actually take that hourly fee and add that, and it is automatically approved to come into your bank account too. Reevaluate at 3 months. Do you now need another 3 months to figure out how you're going to work with this client, or can you take it from there? So that's the third way of mitigating risk. And the fourth way of mitigating risk is not just talk about what your scope of work is. Be incredibly clear on what your scope of work is not. So for example, your scope of work may include this and this and this in payroll. Your scope of work does not include new hires. New hires are, and set a fixed fee. It's $100 a month for you to onboard a new employee for your clients. It's $50 to offboard the employee, because all you got to do is go and get them out of things. It is maternity, different than offboarding. So you've got a maternity fee. You've got, this is another one. This is an out of scope charge that is very clear with my clients. International payments. Even if the file is not multi-currency, which is a whole other bucket of fun. Sometimes they may still have vendors from all over the world now. And in Pluto, it does take a little longer to do the conversions. You've got to convert. Maybe you're paying them in European or Australian dollars. Totally out of scope from the rest of accounts payable would be international payables, for example. So please make sure that you are as clear on your out of scope work as you are on what you're going to do for them. And go back and think about all the odd little things that clients have asked you for over the years and come up with a fee for those. Fixed fee, but outside of their monthly fee, and they know what it is. Have a menu of, if we're going to do this, these are the out of scope. Be as clear. I'm harping now, but I don't think that I can mention that enough, although I think I just over mentioned it. Go ahead, Shahram.
No, you're
Sorry.
good. So this is a big risk, and a lot of firms struggle with it. Like she said, there's a lot of things that can cause you to go out of scope. There's a lot of things that can cause you to spend more time and not really really kill your rates and your profitability. So what we recommend to overcome this is you actually track time. A lot of firms, when they switch to the fixed fee model, they think they don't have to track time anymore because you're not billing off that time like you were at the hourly. But it's a very, very good practice to keep tracking time, because it's going to help you identify these issues. So for example, and the thing too is not just you, right? Not just you as a firm owner has to track time. You need to have your whole team track time, so you can see across the board, especially the work you're not touching, how long is it taking? Is it over budget? Is this client becoming unprofitable for us? And when you track that time, you can take it to calculate what we call your effective hourly rate. People have different names for this, but it's basically how much you're technically earning on an hourly basis. So even though you're not charging hourly, you want to know, if you were hourly, how much would you be making? Some people make, $100,000 a year, but they're working 100 hours a week. They're not really making as much money as they think. And this is kind of helps you see that. So you take your monthly fee divided by your time tracked to calculate this. And this tells you how profitable realistically that client is for your firm. So in this example, like, we bill our client $1,000 a month. It takes us, our team, 10 hours to do the work. We're making $100 an hour based on this specific client. And you want to calculate that for every client, so you can see which clients are in scope, which clients are out of scope, which clients are profitable for your firm, and which clients are not profitable for your firm.
Yeah,
So
and
what is
actually,
Go ahead.
I'm gonna jump in a little bit here too. So not only you time tracking, which, like I said, I love in Financial Sense that we can track at the task level, set how much time it should be. We can task at the project level, but I
Mhm.
want to come back to that other elements, and that is emotional toll or the joy that's happening here. So while you're time tracking, you could put some of those notes in there too. I think that the data you need to capture is not just the time that you're doing it, but we have a way of capturing the emotional capacity of that as well when we are doing the time tracking. Encourage your team or yourself to make some notes of that so that
Yeah.
again, when you're planning for capacity or figuring out which clients need to go or be price increased or whatever, your time tracker allows us to put emotional capacity notes in there as well. And one thing I forgot, so I want to come back to it, is on that mitigating the risk. I gave you 4 things to mitigate the risk. The other way to, one of the things that you need to do to increase your prices and to mitigate the risk of next year not having a good enough price is do a fiscal re-engagement. Don't do a calendar re-engagement. Don't want to do them all at once. Do a fiscal re-engagement so that you're doing them one at a time, or 2 or 3, depending on what their cycles are like. We're all going to have a glut at December anyways. And 1 month, 2 months, depends on the client. Ship them out a satisfaction survey and see how they're feeling about your services. Make sure that you are letting them know all of those things you are doing for them. So ship them out this satisfaction survey and don't just say, how did we do? Give them a list. Did we comply? Did we give you reports on time? Did you understand your financials? Were we courteous and kind? Do you feel that we improved your business life? Whatever. Think of all of the good things that you do for your clients, list them out and give them an opportunity to check them off and think about them. And then give them a list of the things you didn't do well so that they have some options there so you can grow. And also make sure your engagement letter matches some of the criteria for the things that you're sending out. And if they are really happy with you and they want more services, you have an opportunity to now increase prices because that client has said they're really happy with you. And if they have something they're not happy with, you can fix that right away. And I've actually had that lead to a larger engagement. Even though they had something they weren't happy with, we turned that around and it led to a larger engagement. So make sure upon that re-engagement, well, first do one, and then ask them how you're feeling, how they're feeling about working with you. Okay,
Okay.
done.
So when you're tracking time and calculating your effective hourly rate, what are some, we like to share some best practices that we've seen over the years. So the first thing you really want to do is you want to set your goal rate. You really need to decide how much you need to make to run your firm profitably and sustainably, because you have expenses, right? And you need to factor that in. What we've seen is most firms, like the good place to price yourself is $70 to $150 an hour. 70 if you're new, not as experienced, but as you gain experience, increase that over. And some firms charge more than $150 an hour. This is just kind of a benchmark. But I do want to say a lot of firms don't do this. A lot of firms start out, and it's really in every field. It's a mental battle to price yourself at what you're worth in the beginning. A lot of firms price themselves around $30, $35 an hour when you do the math. So try to start out in that 70 or price more based off your experience. So set that goal rate, because then when you're calculating that rate every month, you'll be able to look at the clients that are below or above your rate, and it'll help you identify where you actually need to renegotiate your engagements. And the best part about this is you want to do this the first month with every new client. So Kelly had some good advice, like actually doing the work for the client for a few months and then understanding how long it's going to take, or really getting a good idea of like, what's the scope of work going to be, and then setting your fixed price. If you don't do it that way, which that is a really good way to do it, you want to track this in the first month, right? Because the sooner you can identify that the client is out of scope, that they're unprofitable for your firm, and that you need to increase your rates, the better. It's easier to have that conversation up front early on in the process than 6-12 months down the road when you say we got to increase pricing, but they don't understand why it's worked so far. And then on top of that, you need to track this every single month. As we talked about, your clients, they grow, their businesses become more complex, their books become more complex. The work you do for them takes more time. So tracking every month will allow you to see those trends and those clients that were profitable for your firm, which ones are slowly becoming unprofitable. And so you can catch those, because the longer you go without catching this, the less money your firm's going to make, the less money you have to invest in your business, or really the payback to yourself.
Well, the client becomes more entrenched too.
Yeah.
Like the longer you let it go on, they get deeply entrenched. Well, that's the price we've had. You didn't tell me anything more. What do you mean you're increasing it? Nope, that's what we've been paying.
Yeah. So one bonus tip, especially in the beginning, if you price incorrectly and you're nervous about negotiating your rates, include something in your engagement letter that allows you to adjust your fees for if you underquote work, and don't just throw it in there and hope they don't see it. Actually have the conversation with the client, explain that, we're expecting it to take this much time for these reasons, and this is why we're quoting you at this. But I want you to know, we sometimes, it's hard to know until we can't get in the book. So this may change based off what we see happens, and giving them this transparency, having this conversation up front will make it a lot easier to renegotiate your rates if you do underprice your services.
And again, every couple of months, remind them what you're doing for them. And I'm going to give a quick example. I live in a cabin on a lake that was overrun with creatures and critters and all kinds of things. And then a couple of years ago, we signed up for pest control. And they charge me every month, and it goes on my credit card. It was gold for the first little while. It was amazing until I forgot what they were doing for me. So they didn't send me a thing like a thing that's saying, here's what happened last month. Here's a little summary of what we noticed in your business. Here's what's going well. You don't have any mice right now. It looks like you don't have any spiders, snakes, rats, raccoons, critters. I mean, I could go on and on. Ants. We had ants like it was nobody's business. I had forgotten all of the good things that they were doing for me. And all I was seeing on my credit card was this $112 a month. Luckily, because I was going to call and I'm going to be like, okay, I'm done here. Like, I don't need these guys. I was here one day when the guys were doing their thing, and I watched them, and they are sweeping with this stuff for spiders. And I said, what are you doing? I didn't know they were doing that at the time. I said, what are you doing? They said, well, this is what keeps the spiders away. And my head went, oh, I haven't swept for a spider in over a year. I swept weekly for spiders. Our house was covered in it. We had mice, we had ants, we had them all. But I had forgotten what a great job they were doing for me, because they didn't remind me of all of the problems I no longer had. Make sure, do a little summary at the end of the month. I noticed your cost of goods sold is doing this, and yada, yada, yada. Some of the engagements don't call for the advisory work. I get that. Don't give advisory work away for free. It doesn't mean you can't give little insights that say, I got your back. I'm looking after you. It's not just $500 a month for no apparent reason. Remind them why they have you.
Yeah. Good point. Good point. So let's talk. So like, let's say you underprice your services. I wanted to give some tips on like how you can renegotiate your rates, because this is a tough conversation for a lot of people. It's really hard to change your rates, increase your pricing, and have that conversation. It's nerve-wracking. It's nerve-wracking for everyone in every industry. So we wanted to share some tips. I'm going to jump straight into the price increase letter and just talk about why we did certain things, just for the sake of time. So we have a price increase letter we like to share to people that helps. That's a good template for increasing your pricing and sharing this and getting that message across to your clients. So the first paragraph is, hey client, we are so pleased to be working with you and glad that you've been happy with our services. So right here, we're just talking about and just reiterating the fact that they've been happy with our services. And the next, you want to say, we have everything in place to consistently deliver accurate financials and are proud to give you the financial visibility you need to run your business. So what are we doing here, right? We're showing that they've enjoyed our services, and we're going to continue to provide these consistent deliverables every single month, and talk about our value. Why is that valuable for the business? Why is that important to them? It gives them that financial visibility they need to run their business, operations to run smoothly. So just really hitting home the value and reiterating the fact that you provide consistent client deliverables and you have that structure set in place to continue to offer these premium services. So this just really warms up the conversation. And then you share the data, right? Give them the reason about what's going on. So after running our standard reports, we realized that it takes more time and resources than we expected to deliver the level of service your business needs. This is because of blank. So sharing the facts. Don't just say we're increasing pricing. Give them the reason why. Like Kelly was talking about, explain the problems that you've run into. Give them that transparency. And luckily, if you're tracking time and you're using a system like, so in financial sense, we give you detailed time tracking reports. We can tell you exactly why the work is over budget. You can have those facts and that reasoning to tell them it is because of this. They will be more likely to understand it and less likely to rebuttal it, because they can see logically why you need to increase your pricing. And then, unfortunately, we have to increase your monthly rate to continue to provide the level of service your business requires. So hitting home, the level of service they've been getting from you that they've enjoyed, that you're going to continue to consistently provide. Their business needs it. And for you to be able to provide that profitably or in a sustainable way for your business, you need to increase your pricing. They're a business owner. They will understand that they need to get paid what they're worth and what they need to run their business.
I'm going to jump in super quick, and you don't know this is coming, and maybe you're going to scold me later. But I can't help myself because I edit lots of copy over the years. Take out the word unfortunately.
Yeah, that's a good point.
We've been started more with, because we have done such a great job, it's time to, not we have to, it's time to. So I love this. And I just wrote down that I would love to, if we could get your price increase letter template into the workflow watering hole for people somehow. You and I can talk about that after.
Yeah. I'm also gonna, real quick, I'm gonna drop it into the chat.
Oh, that's great. But I would reconsider the word, unfortunately.
No, I think that's a good point.
Use all the language of, you have every reason in the world to increase the prices for this client because you've done a great job for them.
Yeah, no, that's actually some really good feedback. I like that. Let me see. I'm going to drop this to everyone.
So while Shahram's doing that, hopefully everybody has a bit of a price increase letter mindset going, and take a look at what your letter is and make sure it is all forward facing to what the value is to your client, what you've done great for them, how you're going to continue to have a great relationship.
Yeah. So in this next part, some people may not like to do this. It may make them a little uncomfortable, but I think what's really important is when you're increasing your pricing, you're confident in it. If you're confident in it, your client will be confident in it as well. And also differentiating yourself. Why are you confident that you need to charge this price? So in this paragraph, if the price does not fit within your budget, I'm glad to refer you to a more affordable firm, but they will not be able to provide the level of service we guarantee. So this is showing you're so confident that you're willing to send them to other business, but they're not going to get that level of service that we've been talking about, that they've enjoyed, that their business needs. So it differentiates you. So I think this is a great point to put in there. It shows that confidence, it differentiates your firm, it shows the value you're bringing. And then lastly, I like to put this, if you have any questions about the rate increase, you can reach me and then provide your contact information. This just shows an open line. You're confident in your services. You need to do this. You're glad to answer any questions, and it gives that transparency and makes them feel comfortable that, it's not, we're increasing our pricing. Don't talk to me about it. Just having that open line of communication with your clients is going to really build trust. So after you send this out via email, we recommend you do a follow-up. Check in with some of your clients. It doesn't have to be all your clients, maybe your most important clients, but call them the next day. Not everyone's looking at their email. You don't want them to be surprised if they miss it. Have a conversation with them, give them a call, talk about your prices, reiterate some of the points. So this is a thing I want to talk about because a lot of firms and businesses struggle to increase their pricing. It's scary, right? You're thinking, what if they can't afford my rate? What if I lose all my customers? What if they hate me? And it's just complete chaos and they revolt, right? But at the end of the day, it's never as bad as you think. It's actually very rare that you lose a lot of clients or really any clients to a price increase if it's justifiable. If you're looking at this and you're doing something within reason, you're not going to really lose any clients. But some things that can make you more comfortable with this is you're doing their books. You know what they can and cannot afford. You know
Right.
where there's how much money they're spending. So take a
Yep.
look. I mean, compare yourself to what they're spending money on and see the value you're bringing. And if they come back and they bluff you, maybe you can call that bluff because you know what they're capable of being able to spend. And reiterate that value, right? Like we did in the letter. Explain why this is important. What are you bringing to the table? Why are you different? But again, also I want to reiterate, it happens less frequent than you expect. It's very rare you actually lose clients. Always has a positive impact on your business. But even if you do, right? If you have a few clients that are difficult, just let them go. It's okay. They're not really worth it. Usually the clients that are the most price sensitive or cheap, they are the ones that cause the most problems. They are the ones that emotionally drain you. They want the moon and the stars for pennies on the dollar. It's in every business model I've looked at. The clients that are price sensitive cause the most trouble. Those are the pain in the ass clients, and you're better off letting them go mentally and financially for your business, because that's time that you could be putting and stuff that's going to generate more money and profitability for your firm. So key points, right? It's easy to underprice your services in a fixed fee model. It's whether you underestimate it at first or your client becomes more complex over time. It's easy for these clients to become less and less profitable, killing your bottom line. So track your effective hourly rate, track time, calculate what that is, and identify your unprofitable clients early in the beginning so you can have that conversation faster. And every month you go by is money lost as well. And track it every month, because again, clients can be profitable at first, but they can become unprofitable over time as they become more complex. If you do this, it will help boost your bottom line. It will give you more money to invest back in your business, to scale your firm, and just to live a better quality of life. So I want to talk about a new problem. You start doing this every month. It's great. That's going to give you the insights you need to build a profitable and sustainable firm. But running these reports every single month for every single client can take time. We saw this when we were interviewing the accounting firms before we built Financial Sense, how much time they were spending putting all this data into spreadsheets and calculating it for all their clients and figuring out what's going on. So when we built Financial Sense, we built something that can solve this problem and automate this process and make it easy for firms to understand which clients are killing their profitability. So this is just an example of what it looks like in Financial Sense. You can see your whole client list side by side. Since you're tracking time in our system, you'll be able to see all the time worked on each client for the month across your team. So it's your team's consolidated time. Then it's going to have your fixed rate. And then it'll tell you for each client every single month, what is that effective hourly rate? You can see, are you hitting that benchmark? Let's say it's $100 a month. Right here, you can see there's at least four clients that you need to renegotiate your fees for. So it gives you that visibility without having to spend that time. So you can catch it faster and you can then focus on other things and boost your firm's profitability. And then just talking about the benefits, right? With doing it in Financial Sense, obviously you're saving a lot of time. But the other thing is the detailed time tracking reports. Remember how we talked about you identify this client, you need to increase your fees. Maybe you want to know why, what's causing that to happen so you can talk to the client about it. Let them know this is the reason you need to renegotiate your fees. We have pretty detailed time tracking reports that will tell you which specific tasks are causing the work to go over budget. So then you can share that data and successfully increase your pricing. This is just one of our clients. He's talks about how it helped him identify it faster. So instead of waiting 3 to 4 months to identify the unprofitable clients, they're able to do it in weeks because they're using our system. And just more about what we do. We're not just about increasing profitability. At the core, we're a workflow tool We help you collaborate with your team, track the status of client work. We help you automate reminders. Again, talking about saving time with automations. We help you automate client data collection so you don't have to spend hours every week chasing down your clients for info. And we keep you organized to keep your team productive. We're basically a work management tool. And then
On steroids.
yeah. So I just wanted to run through that because we were low on time, but we can open the floor to questions. I see there's a lot of things in the chat. Or did you answer these, Kelly?
A few. So if maybe we can be done with the slide deck so we can see a little bit more of everybody. And if you have a question, I don't think I answered it very well for Krista. But if you want to unmute yourselves and ask any questions, I mean, let's stay on for a few minutes. I know everybody's got questions about pricing. Maybe we should stop the recording so you can feel comfortable asking.
Yeah, we can do that.
Yeah, so